Hi all, I just want to do a quick video analyzing the financial statements of H&E Equipment Services Incorporated. So this is a company which I recently invested about $1,500 in, and my main reason for investing in it was because I found it when I was scanning for companies which had a low RSI but a positive change. Kind of indicating that they were recovering from weakness. And then I would individually go through those charts and see if there was anything which would compel me to. And if it was something that just getting lower and lower and lower, usually that wouldn't. But this stock was one which I noticed that the price had come down to a rising uptrend so that it actually had a potential for making profit on. And so this is, if this is going to load, and this is really slow for me today. H&E Equipment Services Incorporated. So this is a company, it's a US company in the industrial sector, and their main source of revenue is basically renting out, or leasing, I should say, construction and heavy industrial equipment to companies which are working on construction projects. So straight away you could think like, what could be increasing the profit potential or decreasing it for this company? It would be if things are being built, if new projects are created which gets their demand. That would be it. So in general, the economy expanding will be good for this company, as virtually most companies in the economy, if not practically all of them. So the edits which I've made should appear. That's strange. There we go. Okay, so I've got 4 green lines here. These are support and resistance levels, and each of these has been historically tested many times, and right now it seems to be sitting on one. So even now it's just being confirmed. And again there. And then the blue lines are trend lines, or basically I would say support and resistance lines. They're in flux. So instead of being set, they change and the stock moves with it. So what I'm noticing here is a trend of high highs and higher lows, and also it's getting narrower. So I think this is called a rising wedge, and can indicate when it gets to the breakouts, it may break out either up or down and get to new levels entirely. And the pressure seems to be up, however, that's just speculation from me, and it could easily end up breaking out to the downside. My plan here was, because it's got a low RSI, I'll just change out MACD to the RSI. The relative strength index. So that is showing that got a reading of 19 on the 1st of May. If I change it to weekly, that didn't get oversold. In fact, it got oversold in COVID time. Yeah, down to 20. But anyway, we're not in COVID. We can't expect events like that to happen all the time, nor should we really wish that to happen from a non-investing standpoint. From an investor's standpoint, of course, if the world has a crisis, you go out and buy everything, as long as, you don't get killed yourself. Anyway, so I think it's going to be bouncing off this lower trend line, and so that's a positive sign for me as I include this. And I said, okay, my wording for this was a bit confusing. I said initial manual stop loss for position at $42.35, which is for the stop loss, even though it sounds like the position began at that. The position began at $46.65, which is the close for Friday, the 3rd of May, 2024. And the stop loss is about here, yes, $42.35. The reason why I chose here was because it's just under this strong level of support you see right here. And I think that if it does come down, um, it could kind of hold this, but as you see here, it went under it for a bit while still holding it. So that gives it room to even perhaps have a manipulation wick, for example, so that I don't get caught out by the market makers. But it also means I think it's enough that um, this rising trend line is broken conclusively, and then this also strong line of support isn't held. And sure, there are more. There are, this, there's even this. But really, if I think if it breaks out of this rising trend line, which it's held 1, 2, 3, 4, almost 5, and I should just extend that a bit so I get there. Basically 6. If it breaks out of here, I think it's kind of that's a lot of weakness, and it could easily start going into like a longer term downtrend, something like here. That could easily happen. So I'm absolutely prepared to just get out and take my loss of whether it's about 9% at this stop loss. So I'll do that. But I say manual and not automatic. Reason why I don't choose automatic is again because of manipulation and because you can get like some ridiculous wick happen in the first 5 minutes of the day, which is immediately reversed. I mean, you see it right here. All right, 9:30 morning bell just zooms up and then it comes down very quickly. And I'm not getting stopped out. I'm not selling a position because there was some crazy variance in prices. I'm selling my position because I've decided that my thesis of why I got into the trade was wrong. And I just, my thesis was wrong, and I'm admitting that it's wrong by getting out of the trade, but also I'm seeing that it's conclusively disproved my thesis. Rather than just going against it briefly, the machine says, okay, he's out. I think automated stop losses are definitely almost unavoidable in day trading, but in swing and position trading, for me, this is more along the lines of a position trade because I could see myself holding it for really as long as this uptrend maintains itself. So, this could even carry on for a year, maybe more. I don't know how long it'll last. Maybe something like this will happen. Like I will get maybe 66% gain on it, and it will take 2/3 of a year. And that's fine by me. I'm happy with that. So that's the start from the technical analysis viewpoint. Currently set at $46.65. And now we're going to its financial statements. So on its balance sheet, I first off noticed that from 2022 to 2023, its cash declined from $81 million to $8.5 million. Is that? Yeah, it is. 330,000, 81 million. So that massive decline, I was thinking, why is that? Maybe 81 was a large amount on hand to begin with. I would have to check through earlier financial statements to see if that is unusual. But my first thought is that maybe they had that on hand briefly because they wanted to put it into perhaps shares or perhaps a money market account or really all sorts of stuff potentially. But that's why. I would go through the notes though to see why that is. And then this is all pretty much usual stuff that I would expect. I would expect their biggest asset is the rental equipment, and so inventories, rental equipment. I thought that rental equipment would be a kind of inventory, but maybe it's specific enough that it has its own. It has its own section, and also it isn't properly plant and equipment. So that would of course be not that kind of equipment wouldn't be items which the business is selling on a regular basis. If they're sold on a regular basis, they would either be inventories or rental equipment, which I'm going to assume is a subsection of inventory, at least an inventory which doesn't get permanently sold. No, I'm going to look into this after I've recorded this video, why rental equipment is separate to inventory. Pardon me. Operating lease right of use assets. Good. So that's assets, that's 2.6 billion. Liabilities is 2.1 billion. So, from what I know of, liabilities, the golden rule for American or perhaps Western companies in general. I say Western companies because Asian companies generally like to have less leverage than Western companies, from what I've heard. Going on things like longevity and safety. Whereas American companies are more aggressive. The golden rule for liabilities is it's 0.5 times assets. So for this, you would get, what is that, about 1.225 or 1.3 billion. 2.1 billion is getting closer to total assets, so a bit over leveraged, perhaps, a bit too much on the debt side. But maybe that's good for the industry. Also, something else I could perhaps research. Maybe. Is it better for industrial companies to be more leveraged? I was of the assumption that it was, if you're something like a high growth company, like a tech company, you want to take on more leverage. But if you're a more slow growth company, like people would often say industrial companies are like value companies along with like energy and basic material and healthcare, consumer staples, these more safe sectors are supposed to, in theory, take on less debt because their turnover, their profit margins are not as high. But then they also say like the mining sector is said to have large amounts of debt because their revenue comes in cycles. And same with, say, biotechnology. Their revenue comes in cycles. It isn't like consistently throughout the year. It's only like certain points within the year, or maybe once every few years. So they need debt to cover the downfall. And I don't know about construction. Maybe there's something similar. What do we got here? Senior unsecured notes net of unaccredited discount of 5.8 thousand and 6.9 thousand, deferred financing costs of 1.3 thousand and 1.6 thousand respectively is making up the largest portion of liabilities at 1.2 billion. And senior unsecured notes, just senior. I don't know what the senior means, but I'm thinking that notes is just simply debt that they have to pay off. But unsecured no collateral. I'm not sure. Maybe the unsecured means that the interest payments will be more. Again, something else I could look into. That could also be perhaps a possible reason towards why the stock isn't higher, because their revenues are really good and growing, which I'm going to get into. Shareholders' equity is small, 534 million. So, this assets divided by 5, or 1/5 of assets is equity, and that seems pretty small to me. And most of that is retained earnings. And it's actually less treasury stock. They must have bought back stock at some point. So, yeah, and of course assets equals liabilities and equity accounting stuff. income statement. So this is the best part for investors. This is exactly what we want to see. So we get to see growth from 2021. Revenues has gone from 1 billion to 1.2 billion to 1.4 billion. So that's really good. It's like we're adding on 200 million every year. And if we can just keep doing that, that will be solid. And this chart also shows that as well. Like all these E's that we're seeing, pretty much everyone revenue estimate reported is beating estimate. So, and this is quarterly, of course. 385 million beats 382 million. Here, 400 mil beats 382 mil. 360, 344. 322, 307. 353, 339. 324, 303 million. And I could go on, but that just shows that they're just kicking revenue estimates out every single quarter. EPS is sometimes off. That's why you see these red ones. Um, um, estimate is 1.35 EPS, and reported is just 1.35. And again, same thing happens here. 1.78 reported, 1.71, and or standardized. Sorry, 0.71. Standardized is 0.708. It all looks pretty solid to me. Of course, it's not like NVIDIA levels of revenue growth, but it's really solid. And again, gross profit is increasing in line with it from 647 2021 to 689 million through to 784 million. And expenses, I won't go through it all, but that's evidently not been increasing too much for gross profit to be able to remain this way, just increasing a healthy amount to be able to fuel that revenue, of course. I do notice that selling general administrative expenses has gone up a fair bit from 290 through to 405. Maybe they're expanding on the corporate side potentially. Not sure. Net income goes. Okay, so top line total revenue and bottom line net income goes from 60.5 million to 133.6 million, and finally 169.2 million of the latest year. And to me, that is a tremendous increase, actually, even more than revenue and gross profit. That's a whole double of net income from 2021 to 2022. That's got to be influenced in some way from COVID. So if not for COVID, that would perhaps be closer. I don't think it would be at or higher than 133, but it'd probably be something more like 100, maybe 110. And then this is more realistic growth, 133 to 169 million. Oh, damn. Income from discontinued operations before provision for income taxes. Oh, damn. Yeah, they had an income from discontinued operations in 2021, financial year 2021. So it actually was just what I said, 102 million. And these are virtually untouched. That one isn't touched, that one's very close. Share information. Shareholders' equity. Should I even get into that? No. I'm kind of losing my voice here. I haven't spoken this much in years. Cash flows. I don't think it's really necessary for me to get into these either. I want to see one thing's in notes. Okay, that's how they've prepared it. I just want to see cash and cash equivalents. Okay. I don't know, we're still in description. What is here? Exhibits. No. This is the notes, I'm pretty sure. But it's a very unfamiliar format to me. Usually I would see footnotes to be in the financial statements, and then that footnote be linked to these sections. I suppose this is all it says about it. Cash and cash equivalents include cash on hand and highly liquid investments with an original maturity of 3 months or less. Okay, so it says highly liquid investments, so this won't be savings accounts. I might just that cash on hand could easily also be for some kind of capital investment in equipment or anything. So I'm going to end it here. So their financial statements look sound in pretty much every way. Just the only main issue that I see is that they perhaps may be over leveraged. And why could I see the company isn't growing faster? And it's not done tremendous growth in 2023. I mean, as of now, it's basically no gain. So I think the reason that investors not going into this as aggressively as they might is just because it's not growing as fast as other options are. So that could be why. So I think from a perspective of if you're looking for a company that is outperforming its relative industry sector, that kind of thing, this isn't what you go for. There are probably other companies in this same industry even, and especially in the industrial sector, which have sort of a similar chart, but their revenue growth and income growth has been so much greater, which is really what this is all about for companies. And that their charts will be a lot stronger than this one. What this is for is if my technical analysis is correct, then this upward channel, these upward lines of support and resistance should be respected. And so this should bounce off it. And I'm not saying it's just going to go like straight up to the top in 2 weeks and net you some, or a month, and net you some incredible 55% gain. I think it will take longer, but I definitely think that it presents itself to me as a low risk and not high return, medium, moderate return, low risk and moderate return investment with a realistic contingency. So that's what I think about it. H&E Equipment Services, this is the website, he-equipment.com, and annual reports going back to 2005 and everything else. Okay, that was everything that I wanted to talk about in this video. Thank you for listening. This was Wolfram Melchior Stone, signing off. Goodbye.